Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are looking at the top 5 stocks that I am buying right now while the stock market is downtrending, and if the stock market just so happens to crash, I will also be doubling down on these particular 5 companies. For more videos like this one, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below, and without further ado, let's just get right into today's video. So to start off this list, this is going to be the top 5 recent stocks that I have bought on the stock market lately, because the entire stock market has been pulling back recently, but all we know is that while the stock market is falling, some of our favorite growth stocks are on sale, and this is a time to double down on your high conviction plays. One of my very high conviction plays is of course Amazon, ticker symbol AMZN. If you didn't know, Amazon is an e-commerce retailer that is doing fantastic, and they have a fantastic growth trajectory, which is why I'm extremely bullish on this company. Amazon is more than just an e-commerce business like many investors would lead you to believe. And we know this because if we look deep into their financials, over 50% of their operating income is now derived from their web services segment. On top of this, their advertising grew to over $30 billion in revenue in 2021. So Amazon has multiple revenue sources outside of their very successful e-commerce business. But what do analysts think about Amazon? Am I the only one that is very bullish on this company? Well, surprisingly not. Around 56 analysts currently cover this stock, with 55 of these analysts saying that Amazon is a fantastic buying opportunity, and one analyst said to hold this company. However, no analyst is saying to either sell AMZN stock, and none of them say it's going to underperform the overall stock market. Right now, the Amazon stock trades for around $2,910 per share, while the low-end analyst price target over the next 12 months is $3,333. The average price consensus among analysts is $4,100, while the high-end bullish price prediction for Amazon is $5,000 per share, and clearly since I'm an Amazon bull, my personal price target is between $4,000 and $5,000, so we'll call it around $4,500 as my personal price target. The thing that's really spectacular about this particular investment is that Amazon is actually selling at its lowest price to earnings ratio that it has over the last 5 years. So their PE ratio, or price to earnings ratio, is literally trading at a fantastic discount, which means that Amazon is giving investors fantastic value right now. However, if you're looking at the Amazon chart, you can see that we are buying the stock based on market weakness, and that's when I normally decide to buy companies. I want the companies to start downtrending before I start to invest into them. Many investors do the opposite, and they actually buy close to all-time highs because they just think it's going to keep going up. However, often they will actually get burned trying to do the strategy, which is why I always wait for my favorite stocks to pull back, and that's when I decide to invest into them. So for Amazon specifically, I've invested on the weakness here, I invested here during the time of the lockdowns and pandemic, and I am also going to invest right now. Now, with Amazon and other stocks on this list, because of the macroeconomic environment that we're in right now, which is very negative, these growth stocks can continuously trend downwards. However, even if that were the case, I would still dollar cost average and nibble at Amazon the lower it falls, because fundamentally, the company is very solid and they have fantastic financials. Also, Amazon to me is one of the best stocks on the stock market that you can buy right now, and it's diversified in a plethora of different segments besides just web services, advertising, and e-commerce. Amazon is a huge company, and they own brands that you probably didn't even know that Amazon owns. But before you invest into this company, always make sure to do your own research. This is just a company that really fits into my portfolio, and it has given me fantastic gains. Because from the first time I've invested into this company, it's been really nothing but upward trajectory and momentum. So on every weakness, I decide to double down on this company even more. Also, I think Amazon is a very safe company to own, even during a stock market crash, because I know that eventually it's going to rebound. The reason behind this logic is because they offer products that people are going to need regardless of the current economy or stock market environment. So overall, I would say Amazon is a fantastic blue chip stock to own that's both very safe, very diversified, and a strong growth stock. which is why I will continue to buy on weakness, and the lower it goes, the more I will actually double down on this particular company. Now, the company we're going to talk about next is actually Airbnb, and if you didn't know, Airbnb is a travel facilitator. Basically, it allows people on their app to book places to stay, which are owned by Airbnb hosts, and normally they're in better locations and or much cheaper than many hotels. This has put a huge hurting on the hotel industry, and Airbnb also offers experiences, which is extremely popular. So now that you know what the company does, why am I doubling down and buying more Airbnb stock, and why would I continuously buy Airbnb stock even during a stock market crash? Well, first let's consult the analysts. So right now, around 39 analysts cover this stock, with 20 of these analysts saying to hold the company, 18 of these analysts saying that it's either a strong buying opportunity or a good buying opportunity, while one analyst says to sell the stock. So overall, I would actually say from an analyst perspective that this is a hold. However, from my personal perspective, I would say this is a good company to buy. Right now, the current stock price is trading below the 12-month analyst price target, which is $150, while the current Airbnb price is hovering at around $145, and it could continue to trend lower. However, even better news is that the average 12-month price consensus among professionals is $200 per share, and the high-end bullish price prediction is $250. So clearly this company has plenty of upside left, and I am also very excited for what this company can make of itself over the long term. I also really appreciated how in the last couple of years, management has took it upon themselves to start cutting out some of their unnecessary expenses and make the business overall more robust and profitable. So if you didn't know, Airbnb is actually a profitable company, and that profitability is set to continuously grow throughout time. Currently, Airbnb is in a position where they can have extreme growth over the next 5 to 10 years and take away a huge portion of market share from various hotels. I also want to point out that Airbnb is selling at a price to free cash flow ratio near its lowest ever recorded. So right now is an ideal time to buy Airbnb stock, at least according to our stock analysis. Now, if we look over and actually look at the overall chart, Airbnb is a relatively new company on the stock market. So if you missed out when Airbnb originally came on the scene and listed itself on the open market, this would be another ideal time. However, the problem with this is normally after a company gets listed on the public stock market and they surge up, you'll see a consolidation period where the stock will downtrend and then consolidate just to meet their original listing price, which is basically where we're at right now, and then it will continue to trend downward until investors can properly value the overall company. So please be aware of that before you invest into Airbnb stock. However, if you just start to nibble at this company, it could pay off for you very well over the long term, and this is why I personally like Airbnb stock. Now, I'm not investing as heavily into Airbnb as I am to say Amazon. However, I am nibbling at this company because it's close enough to its original listing price, and even if the stock continues to trend downward, that just gives us as investors a better buying opportunity because fundamentally and financially, the company is very sound and they are consistently growing their overall profits, which is why I personally would invest into Airbnb stock. Now, for our number 3 stock, we have Chegg, and not many people decide to report or talk about this particular company because it has had a very rough time as of late. And if you didn't know, Chegg is an education technology company that has a very good competitive moat. They have around 75 million pieces of proprietary content that is very useful for various college students to learn and increase their overall grade point averages. Currently, Chegg has around 7.8 million subscribers, which shows around an 18% growth rate year over year, which is fantastic news. The company also has a very profitable foundation, and their operating results have gone from a loss of $41 million back in 2016 to an actual gain of $78 million in 2021, and in 2022 they are just furthering that agenda. And just like Airbnb, Chegg is currently trading at their lowest price to free cash flow ratio that they have traded at in the last 5 years. So from a financial perspective, this makes the company an ideal buying opportunity right now. Currently around 16 analysts cover the stock, with 8 analysts saying to hold the company, 7 analysts saying to buy the company, and 1 analyst saying to sell the company. Now, unlike Airbnb and Amazon, Chegg is trading above their low-end bearish price target from analysts, which is currently $25, while Chegg's current stock price is trading around $30 per share regarding their CHGG stock. But even with that being said, the average analyst consensus price target for the company over the next 12 months is $44, while the high-end bullish price prediction among professionals is $100 per share. So now let's look at Chegg's stock chart. As you can see, it is trading at a gigantic discount than what it was originally trading at. So as you can see, we have had fantastic growth trajectory, and then the company after March of 2020 absolutely exploded upwards. It hit its all-time high, and then ever since the all-time high, the stock has plummeted all the way down to a price that is literally below what they were trading at back in November of 2019. And this to me signals that this is a good buying opportunity right now. The reason why I am bullish on Chegg is mainly because I like to have price targets for stocks using their free cash flows. So from a free cash flow standpoint, Chegg is a fantastic investment opportunity. However, please be warned that this stock could continuously trend downwards, and this is going to be a long-term investment. All of the companies on this list are not meant for short-term time horizons or stock trading. Instead, these are for long-term investments after you do your own due diligence and research. Speaking about different types of stocks, let's move on to our fourth stock, which is going to be none other than Alphabet. If you didn't know, Alphabet is the parent company to Google. You know, Google, the search engine. And this Google parent company has grown their revenues at a very impressive compounding annual growth rate, or CAGR, of 20% over the last decade, which is absolutely astounding. This advertising giant earned around $257 billion worth of revenue in 2021 alone. And this was mainly due to marketers spending around $763 billion on advertising in 2021, which represents a 22.5% higher increase from what they spent back in 2020. And similarly, how I decided that I was going to invest more into Amazon is the exact same strategy that I'm going to use to further invest into Google, ticker symbol GOOGL. And the reason for this is that their price to earnings ratio is near the lowest point that it's ever traded at within the last 5 years. Also, similar to Amazon, analysts love this company. Out of 50 analysts, around 49 analysts say to buy the company, while one analyst says to hold the stock. The current stock price trades for around $2,597 per share. The low-end 12-month analyst price prediction is $2,965. The average price target for the company is $3,460, while the most bullish price estimate is $3,900 per share. There also has been a lot of positive news to come out about Amazon and Alphabet that I'm not going to get into during this video, but I would encourage you to please do your own research on these phenomenal growth companies. So I'm investing into Amazon and Alphabet because their PE ratios are literally the best thing since sliced bread right now, and I'm investing into Airbnb and Chegg due to their price to free cash flows. However, these are just the top 4 investments. What is going to be the last company that I'm investing into during this current stock market environment, and even if the stock market crashes? What company would I invest into? Well, of course, I want to make sure that I'm investing into a plethora of different companies in various segments, so I'm actually going to invest into Starbucks, ticker symbol SBUX. 18 analysts say to hold Starbucks, 17 analysts say to buy the company, and 1 analyst actually says to sell the stock. So that means, according to analysts, the overall consensus is a hold rating. However, I disagree. I think this is an absolutely phenomenal company, and major investors such as Bill Ackman would agree with me. Right now, the SBUX stock trades for around $82 per share, while the low-end bearish negative price target for the company is $84, the median price target for the stock is $115, and the 12-month bullish positive price target for the company goes all the way up to $136. If you didn't know, Starbucks is a global coffee favorite, so clearly they sell coffee and it's extremely popular. And similar to Airbnb, the management at Starbucks decided to actually start cutting their costs and expenses due to very volatile macroeconomic factors that we have experienced all the way back from 2020 until now, and this has reflected very positively on their overall financials. For instance, their revenues in 2021 were around $29 billion, which is actually $2.5 billion more than what they brought in 2019. Also, I would like to point out that their operating income of around $4.6 billion in 2021 was literally the highest it's been in the last decade. Although Starbucks is already a gigantic company, they are still accelerating and expanding internationally. They are still expanding their overall business, and that's fantastic to see, even for a company as large as Starbucks. And because of this, I think this is going to boost their revenues, earnings per share, operating income, and a plethora of other of their financial metrics, including their overall profitability in the long run. And similar to Google and Amazon on this list, I am buying Starbucks because their PE ratio is near its lowest that it's been in the last 5 years. So overall, this is a very foundational and very successful company, and I am very excited to continuously buy into it. Now, I do want to say a slight warning to investors. Do not over-allocate yourself to any one particular company, because that would be bad risk management. There are plenty of companies that are trading at a phenomenal discount right now, outside of even the 5 that I am buying. Overall, these businesses are on extremely solid footing. They are increasing or growing profits. Their management is cutting down on costs and expenses, and on top of that, these companies are financially and foundationally extremely secure, which is why I love these overall businesses. But with that being said, remember to comment your thoughts down below about these companies, subscribe if you are new, smash that like button if you haven't already, and I'll see you in the next YT video.